It's now the second half of the year. The July 4th holiday each year marks the seasonal peak for the residential real estate market as buyer demand begins to subside as the summer grows older. The new school year looms in front of us. So, what does that mean for the ultra hot market of 2021? How should you read the maybe conflicting messages in the media that you're bound to hear about the market this summer? When we talk, for example, about the potential of foreclosures, pandemic related foreclosures coming to market, we draw a lot of opinions, a lot of comments from viewers. So, no matter what your hypothesis is for how the hot real estate market is ultimately going to shake out, we're here to provide the most detailed immediate data so that you can test your hypothesis in real time. I also try to guide you on how to interpret the other data that you'll see in the coming months. Each week, Altos tracks every home for sale in the country, all the pricing, all the changes in pricing and the supply and demand. And we present this data so you can have it before it becomes available through traditional data channels or the headlines. It's now Tuesday, July 6th, 2021. Happy Independence Day, everyone. Here's the data for the week. The available inventory of unsold single-family homes ticked up again this week. It's a very healthy looking curve for the market. Each year, available inventory peaks in August. Normally, we'd have 1 million or so single-family homes on the market right now. Earlier in the decade, that was closer to 1.5 million. Right now, there are only 374,000 homes available. For those of you who are anticipating foreclosures or the potential wave of supply coming to market to drive prices down, it just seems very, very unlikely that we can get to a situation of oversupply anytime soon. Remember, a healthy market would be 1 million homes. A buyer's market conditions would be more like 1.5 million homes available. It'll be fun this year to see which week is actually the peak of our inventory. We've got 6 or 8 weeks of climbing inventory to go still. Peak somewhere around 400,000 single family homes. While I expected mortgage rates to be climbing this year to slow demand and increase supply, we simply have not seen rates climb at all yet. So when rates climb eventually, be sure to pay attention here to see how quickly demand changes. But is the red hot demand backing off at all? So we keep hearing anecdotes of buyers getting cold feet, especially in the new construction markets, but man, it sure does not show up in the data. Of 104,000 properties that came to market this week, 23% of those sold immediately, with 80,000 or so sticking around for a week or two. The pace is maybe slightly less insane than March of this year, as the frenzy was at its peak. But there are so many buyers still gobbling up everything as fast as they can. This is both, by the way, individual and institutional capital. It's hard for me to look at this data and find anything bearish yet for home prices. As I said, when rates rise, this will be another leading indicator for sales and prices. So keep your eye on this immediate sales metric. That brings us to pricing. Median price of single-family homes in the U.S. stayed steady this week at $399,000. You can see the red line here. Each year we sit at this price plateau for the duration of the summer. All the price gains in the market happen really in the first and early second quarter. This year's Q1 and Q2 were especially strong for pricing. As I said, the peak of the market, was March or in April. But the signal to pay attention to here is the price of the new listing. So that's the dotted green line here in this chart. Normally by July, the listings that are coming to market have to be priced lower, a bit lower, to make sure they move by the end of the summer. This data is such a marvelous example of what we call the wisdom of the crowds. Home sellers and listing agents know exactly where the demand is, and they price accordingly. So right now, they know they still have a ton of pricing power. So this is what they are telling us. They know this because they hold an open house and a zillion people show up, or they know how to price their next listing because the last one last week had 20 bidders. So the dotted green line here shows us very clear. We have continued unseasonably strong pricing. At 369,900, the median price of the new listings has not fallen in 10 weeks. Normally by now, listing prices, the new listing prices will have pulled back by 3 to 5%. So think of it this way. In normal years, let's say it takes an average of 8 weeks to sell your house. 8 weeks from now, school is starting. So to move it more quickly in normal years, we start to price it lower. This year, though, a quarter of the houses are selling immediately. And the average is only 3 weeks on the market. So why cut my price? But by this notion, by this heuristic, we should see the median price of the new listings, those prices, the dotted line here, start ticking down in August, maybe the second week of August. We'll see how that shakes out exactly, but that's what it looks like right now. So that finally brings us to the year-over-year price changes. If you're interested in the broader trends of housing, this is a good one to follow. Remember that the headlines you'll see are for the home price index, things like the Case-Shiller index or those published by NAR. Those are lagging. They use sales data, so they are by definition backward looking. Case-Shiller, for example, was announced last week. The numbers, it's shockingly high, of course. And it's now, it's the 1st of July, and that Case-Shiller index is using data from February, March, and April. You can look at this chart here, the year-over-year price changes. In the real-time data, you'll see the absolute peak is April. So you've got several months, including that April data, in things like the Case-Shiller. So April, of course, has the base effects from the beginning of the pandemic last year. And so that's why it was particularly, price gains were particularly strong in that moment. At this point last year, home prices were rocketing as that demand was just taking off for the pandemic. And so now we start to get some compression. Prices are holding strong now, but they were gaining last year. So year-over-year home price gains are very big, and they're at 13.4% over July, prices greater than July 1 of last year. We can see that they'll end the year in this 12 to 13% gain range. I think if you went back and looked, for example, at our videos from late January, early February this year, you'll notice that that's sort of been our forecast for the whole year. You can really see it because the home price gains all happen in that January, February, March, April time. We can already see where the prices will play out for the year at the beginning of the year. So if you were curious to go check that out, I bet you'd find those there. So again, when you want to know where the market is going rather than where it's been, stick around with this active market data set, and we'll try to keep you informed with the latest. Okay, that's all the data we have for the week. please subscribe to the YouTube channel so you don't miss out on the data. And come to altosresearch.com. There's a link in the description below here. If you need to automate getting local reports to your clients or build the data into your models, that's what we do at Altos Research. So come visit us, and thank you. More next week.